Canadian housing prices have been relatively flat over the past year or so you might be asking yourself, what's next for the Canadian real estate market? Are home prices set to go up, down, or stay the same? Well, depends where you live. It's Curtis Sernoskie with Royal LePage Team Realty here in Ottawa, and today I'm excited to dive into the latest insights from the new Royal LePage market forecast to close out 2025. By the way, if you're interested in learning more about buying or selling or renting right here in Ottawa, my contact information is available on the screen right now. Call or text me anytime, 613-277-6075, or shoot me an email, cerno@royallepage.ca. I'd be more than happy to help. Well, in today's video, we're going to dive deep into the market landscape for 10 of Canada's biggest housing markets. The new report paints a fascinating picture of Canada's housing market. Sales activity is on the rise after a slow start to the year, but prices? They're not following suit, at least not nationally. We're seeing a gradual recovery as buyers step off the sidelines, boosted by improved affordability, rising listings, and recent interest rate cuts. But the story varies dramatically by region, with some markets cooling off while others are still heating up. In this video, I'll start with a national big picture and then break down the data from some of Canada's biggest real estate markets, including Toronto, Montreal, Vancouver, Ottawa, Quebec City, Calgary, Edmonton, Halifax, Winnipeg, and Regina. There's a lot to cover, so let's get started. First, the national snapshot. The aggregate price of a home in Canada stood at $816,500 in Q3, which is virtually flat and just up 0.1% year over year and down 1.2% from Q2. This softness was driven by declines in some of Canada's major urban centers, and breaking it out by type, price for single-family detached homes rose 1.2% year over year to $860,600, while condos fell 1.6% to $580,700. Quarter over quarter, both dipped down 1.1% for detached and 1.9% for condos. Compared to the pandemic peak in the spring of 2022, national prices are down about 5%, with Toronto and Vancouver dropping by more than 12%. Quebec and the prairies in Atlantic Canada are still appreciating. Across the country, sales have picked up consistently over the last 5 months, according to the Canadian Real Estate Association. This is in thanks to the Bank of Canada cutting interest rates to 2.5% in September, which marked the first move since March. While both inflation and unemployment both seem manageable for the time being, consumer confidence continues to lag due to job insecurity, high living costs, and trade tensions with the U.S. A Royal LePage survey showed that 82% of first-time buyers are planning to wait at least another year to buy their first home. Phil Soper, Royal LePage's president and CEO, summed it up best. He said, "Canada's housing market is shifting toward balance, with confidence returning and further rate reductions expected into early 2026. We anticipate noticeably stronger activity by the spring." And by the way, if you're enjoying this video, don't forget to subscribe so you don't miss out on more videos just like this one. Now that we have a snapshot of the Canadian housing market, let's zoom into the regions for local insights. In Toronto, the aggregate selling price fell 3.5% year over year to $1.14 million, while pricing was also down 3.5% quarter over quarter. Condos were the hardest hit, down 7.4% to $668,000. This market is firmly buyer-friendly, with inventory surging. New listings are outpacing sales, giving buyers choice and a lot of negotiating power. Properties now sit for nearly 2 months versus just days during the pandemic. Royal LePage forecasts that the Toronto market will end Q4 down 3% year over year. Shifting east to the greater Montreal area, it's a brighter story. The aggregate sales price rose 4.9% year over year to $635,000 and was up 2.4% from Q2. Inventory has doubled from its pre-pandemic levels, creating a buyer-friendly market with unprecedented choice. Demand is rising significantly on the island of Montreal, which is tied to increasing return-to-office trends. Royal LePage forecasts that the Montreal real estate market will end Q4 up 6.5% year over year. Now, heading over to the West Coast, where the aggregate sales price fell 3.1% year over year to $1.195 million and down 1.9% quarter over quarter. The number of new listings are well above the average, which is also pushing prices downward, but this is great for buyers in Canada's priciest market. Royal LePage forecasts the Vancouver real estate market to be down 2% year over year by the end of Q4. And in Ottawa, where I happen to work, things are quite stable. Aggregate prices edged up by 0.3% year over year to $777,000, but fell by 0.6% from Q2. Sales are nearing long-term averages with balanced supply. Royal LePage forecasts that Ottawa will end Q4 up 2% year over year. Quebec City stands out with the highest growth. For the 6th straight quarter, the aggregate sales price soared up a whopping 16.5% year over year to 452,000 and up 3.1% quarter over quarter. There's an inventory shortage, which is sparking bidding wars on fairly priced homes, though buyers are a bit more cautious. Royal LePage forecasts that the real estate market in Quebec City will finish Q4 up 15% year over year. Heading out west, let's check in on Calgary. Aggregate pricing was flat, down 0.6% year over year to 694,000, dipping 0.3% from Q2. The market here is shifting towards a balance, with single-family homes being competitive while condos are buyer-leaning. Royal LePage projects a 1.5% increase year over year at the end of Q4. Edmonton, on the other hand, showed solid gains, with aggregate pricing up 4.4% year over year to 476,000, but down 1.7% quarter over quarter. Conditions are normalizing after strong years with building inventory. And Royal LePage forecasts year over year growth at about 4% to end Q4. And now for Atlantic Canada, we'll start with Halifax. Aggregate pricing was up 2.7% year over year to 523,000, but fell down 1.4% from Q2. There's a slight edge to sellers, with many renters turning to homeownership due to lack of available options. Royal LePage forecasts that aggregate pricing will end up Q4 at 5% year over year. In Winnipeg, the market remains pretty resilient. Aggregate pricing was up 2.3% year over year and in Q3 to 411,000, but down 1% quarter over quarter. A diverse economy and strong immigration has kept up demand for homes in Winnipeg. Royal LePage projects that the home prices will end Q4 up 4% year over year. And finally, Regina. Aggregate home prices were up 2.4% year over year to 396,000 and flat quarter over quarter at minus 0.4%. Low inventory has led to above-ask sales, with newcomers and rising rents driving activity. Royal LePage projects that Regina will end Q4 with prices up 7% year over year, and there you have it. In this video, we've taken a look at some of Canada's housing market from coast to coast, where each market is headed as we move into 2026. Nationally, Q4 aggregate prices are now forecasted just to rise 1% year over year and have been revised downwards from their original forecast. But sales momentum should build up into a brisk 2026 spring, with urban demand renewing and suburbs attracting families. Improved affordability and lower rates will draw buyers back, but increased cost of living will continue to keep many buyers who would like to make a purchase priced out of the market. Canada's markets are diverging, and Toronto and Vancouver are offering some much needed buyer relief with declines, and while Montreal, Quebec City, and the prairies are showing growth amid shortages, Ottawa and the Atlantic region are holding pretty steady. So whether you're buying or selling or renting here in Ottawa, we're here to help. Let's connect to chat about how I can help you achieve your real estate goals. Thanks for watching. We'll see you in the next video.